Hello everyone, welcome to lecture number 5, question number 5 of your study material. Now this is a full-fledged question on final accounts. What we practiced lastly was a question of only P&L statement, and before that we practiced a question only of balance sheet in lecture 3 and 4. Now lecture 5 onwards we start solving full-fledged questions of final accounts. So first let us do the markings. Baroda Flour Mills Limited has an authorized capital of rupees 3,500 equity shares of rupees 100 each. Market as D disclosure. It will just appear as a disclosure in the balance sheet. That means in the beginning in share capital we write this disclosure, and the amount is double underlined because it is not to be included in the total. From the following additional information in trial balance, prepare statement for profit and loss for the year ended and balance sheet as at 31/3/2020. Stock as on 31st March 2020, wheat and flour. So closing stock, one effect we will minus in change in inventories, and second effect we will show it in inventories itself. So in minus in change in inventories means opening stock minus closing stock, so that we will do it in trial balance. You can see stock of wheat and stock of flour, put tick on that. There we will be showing the change in inventories. In fact, we have purchase of wheat also, it's a flour mill. So you can say that this is a raw material. Rather than change in inventories, you can treat it as a raw material. Factory, just a minute. No, we'll treat it as change in inventories, no worries. Okay. Okay, one more thing, just a minute. Wheat and flour, they are talking about two things. Okay, wheat and flour, they are talking about two things. So here you can say that wheat is a raw material and flour is the finished goods. So wheat is a raw material means it will be coming in cost of material consumed, market as C, and flour will come in minus in change in inventories, and both of their second effect will be inventories. In balance sheet we will show it in current assets under the heading inventories. Okay, I repeat, wheat and flour. So wheat is a raw material, flour is the finished goods. So stock of wheat will come in consumption of raw materials, that is opening stock plus purchase minus closing stock. And stock of flour will come in change in inventories, that is flour is the finished goods, so opening stock minus closing stock. Now outstanding expenses were manufacturing salary, wages, printing and stationery, so will add in expense, and second effect will show it in other current liabilities. So put tick on manufacturing expenses, then salaries, then wages, then printing and stationery. Put tick on all these expenses. Then provide for taxation at the rate of 25.75% for the year 19 to 20. So one effect minus from profit before tax, and second effect short-term provisions. Provide depreciation on building at 9.5%, furniture 25.89, motor vehicles 31.23, and plant and machinery. So minus from tangible fixed assets, and second effect depreciation and amortization. Put tick on building office, then put tick on furniture, then put tick on motor vehicle, then put tick on plant and machinery. There we have to minus it. Directors propose the following appropriation of profits for current year. So dividend of 12% on equity capital and provide DDT at 20.56%. Proposed dividend will come in footnote in contingent liabilities. 12% on equity capital, you can see in trial balance the equity capital is 2,44,000. So this 12% we will count on 2,44,000. Okay, and there are no calls in areas except no. And DDT of 20.56% will count on this. What is 2,44,000? 12%. 29280. So dividend will be 29280. This amount will count on 29280 for the 20.56%. Okay, it will come in footnote as a contingent liability. To transfer a sum of 12,000 to general reserve. So one effect you will minus in statement of retained earnings. Okay, it is an appropriation. So appropriation you will minus in statement of retained earnings, and second effect add in general reserve and reserves and surplus. Put tick on general reserve, there we will add it in reserves and surplus. Claim of rupees 40,000 for workers' compensation is disputed by the company is a footnote contingent liability. Market value of investments 15,000 is a disclosure D. So even disclosures of share capital, so market tick on share capital, you remember there is a disclosure, and even investments, you remember there is a disclosure. So put tick on investments, 8% investments in government bonds. Okay, so all the adjustments, markings are done. Now remaining items of trial balance. Stock of wheat, as we discussed that it's a flour mill, so wheat is a raw material, so market as C, it will come in consumption of raw material. Whereas stock of flour will come in change in inventories, market as CH. Okay, it is a finished goods. Purchase of wheat, consumption of raw materials, manufacturing expenses, miscellaneous expenses, salaries, employees benefit expenses. Factory closure cost is an extraordinary item. Okay, factory closure cost will come as an extraordinary item. Extraordinary item means it will come in P&L statement directly, means it won't be recorded in the notes. Okay, mark it as important item. When we make P&L statement, first we'll write incomes, then we'll write expenses, then we'll get profit before tax. But here what we will do is, instead of profit before tax, we'll write profit before extraordinary item and tax. Then we'll minus extraordinary item, and then we'll get profit before tax. Then we will minus the tax and we'll get profit after tax. Okay, you can rewind and listen to it once again if you get confused. But extraordinary item will directly come in P&L statement after all the expenses and before profit before tax. Wages is employees benefit expense, printing and stationery is administrative, postage and telegram administrative, traveling is selling expense, audit fees, not fees, make it fees, is selling expense, sundry expense is miscellaneous expense, director's fees is administrative, land is tangible fixed asset, building tangible fixed asset, furniture tangible fixed asset, motor vehicle tangible fixed asset, advances short-term loans and advances. Okay, we assume they are short-term always. Trade receivables, investments in government securities or bonds, non-current investments, cash in and cash equivalents, cash at bank, cash and cash equivalents, plant and machinery, tangible fixed assets, dividend paid for the year ended 31/3/70 last year. This will come in statement of retained earnings as an appropriation. Okay, directly will minus in statement of retained earning as an appropriation, and DDT paid on that also will minus in statement of retained earnings as an appropriation. So if dividend is given in trial balance and debit side, we'll show it in statement of retained earnings. I discussed this in one of the Zoom sessions earlier. And if it is given in adjustments, then that would come as contingent liability as a footnote. Now credit side items, sales of floor, that is revenue from operations, interest received, that is other incomes, rent received is other incomes, profit and loss balance is opening balance of P&L, it will come in statement of retained earnings, share capital, general reserve, reserves in surplus, unclaimed dividend, other current liabilities, and trade creditors are trade payable. Unclaimed means dividend is paid by the company but shareholders have not collected the money. So it used to happen in past. Now because of electronic transfer medium, it gets credited to your bank account immediately. But in olden days, what used to happen was company used to send the dividend to the shareholders by check, dividend warrants by check, and then you present that check in the bank and collect the money. And if you forget to present that check in the bank, then from the company side dividend is paid, but you have not claimed the money yet. So that was called as unclaimed dividend. Company gave you the check, but you did not present it into the bank. So for the company, you can anytime come and collect that money. So it's a other current liability. Okay. Unclaimed means you remember unpaid dividend. So that is other current liability. Now, adjustments are all discussed. All of you pause the video and make the format of profit and loss statement of Baroda Flour Mills and as well as balance sheet. In profit and loss statement, just remember this new item will come across as I said. So after profit before tax, you write down profit before extraordinary item and tax. Okay, and then you have after that sixth item, what you will have is extraordinary items and tax. Extraordinary item. That is what we have, factory closure cost. Then you will have profit before tax. Okay, so in this table, when you make it in this question, you keep these things in mind. 7th would be profit before tax, and then after that 8th would be provision for tax, and 9th would be profits after tax. So your profits after tax would be calculated in what manner? Yes, profit after tax would be calculated as 7 minus 8. Okay, so all of you make this columns when you make this P&L statement. After expenses, don't write profit before tax, write profit before extraordinary items and tax. Then you write extraordinary items, then you write profit before tax, then you write provision for tax, and then you write profits after tax. Okay, and balance sheet format remains exactly same. So make the formats, then we'll make the notes. Everyone make it fast. Pause the video and make the formats. I hope everyone is done with the formats. Now let us make the notes. First note will be of P&L statement. So balance sheet. So first note will be of share capital. Share capital means this 2,44,000, but tick is there, means this disclosure will also come. 3,500 equity shares of 100 each, and 2,44,000 divided by 100. How many shares would be coming in issued capital? Face value is 100. Okay, so 2,44,000 divided by 100, 2,440, 2,440. This is issued capital. So first you all write authorized capital, that is 3,500 equity shares of rupees 100 each. That comes to 3,50,000, and double underline that. Double underline means it is not to be included in the totals. Thereafter we'll have issued, subscribed and paid up capital. In that we will write from the trial balance 2,440 equity shares of rupees 100 each. So that comes to 2,44,000, and total also 2,44,000. Okay, so share capital is already recorded. Now after share capital, next note what we write is reserves and surplus. So in reserves and surplus, RS marked item, what we have is only general reserve. Okay, general reserve 72,000, and there is an adjustment, so write it in inner column. General reserve 72,000 in inner column. In that we add, as per the adjustment, transfer to reserve during the year. So look at the adjustment, what is transfer to reserve during the year, which we have to add in general reserves. In reserves and surplus, 12,000. Okay, 12,000 is to be added in general reserve as transfer during the year. Total will be 84,000. Now, other than that, we also write profit and loss statement, which we get from statement of retained earnings, working note 1. So amount we keep it pending. Okay, amount we will keep it pending. Then after reserves and surplus, we will have long-term borrowings. We don't have. No item is marked as long-term borrowings. No item is there as other non-current liabilities. No item is there as long-term provisions. Short-term borrowings also we don't have. Directly trade payables. Trade creditors of 156,180. Okay, directly third note will be trade payables. In that we will have trade creditors. What is the amount of trade creditors we have put on? 156,180. and that itself is the total 156,180, 156,180. Then after trade creditors, we have other current liabilities. So items marked as OCL, other current liabilities. From the trial balance, we have unclaimed dividend of 18,800. Okay, unclaimed dividend 18,800. Then from the adjustments, we have second adjustment, outstanding expenses will come in other current liabilities. So outstanding manufacturing expense 44,500. Then after outstanding manufacturing expenses, what do we have? Salaries 600. Outstanding salaries 600. Then after outstanding salaries, what do we have? Wages 1,000. Outstanding wages 1,000. Then after outstanding wages, what do we have? Printing and stationery 2,400. All you find in adjustment 2. Okay. Outstanding printing and stationery 2,400. Then do we have any other item of other current liability in the adjustments? No, we don't have. Okay, all the trial balance and adjustments are taken. Now total of this, do it 18,800 plus 44,500 plus 600 plus 1,000 plus 2,400. That comes to 67,300. Then fifth, after other current liabilities, short-term provisions. Now what will we have in short-term provisions? Provision for tax. Okay, provision for tax will come in short-term provisions. Amount we don't know, amount we have to keep pending because that will come to know only after we make profit and loss statement. So liabilities are all done. Now in assets, very first we'll have tangible fixed assets. So TFA marked items. In that very first we have land 24,000 directly in outer column. Then after land we have building office. Now there is a tick on that, so 1 lakh. Building 1 lakh will come in inner column. There is depreciation on that. So building 1 lakh in inner column. From that we have minus depreciation. Now all of you look at the adjustment. What is the rate of depreciation on building? 9.5%. Okay. So 1 lakh's 9.5% will be 9,500. Okay, 1 lakh into 9.5%. That will be 9,500. Outer column 90,500. Then after building we have furniture 10,000. So furniture 10,000 in inner column. From that again we'll subtract depreciation. Now furniture, what is the rate of depreciation? 25.89%. So 10,000 into 25.89%, 2589. Okay, 10,000 into 25.89%. 2589. Outer column 7411. Okay, 10,000, 25.89% minus 7411. Then after furniture, which is the next tangible fixed assets, we have Motor vehicles 48,000. So motor vehicles again 48,000 in inner column. From that again we'll subtract depreciation. 48,000 into, look at the adjustment. On motor vehicles it is 31.23%. Okay, 31.23%. So that comes to 14990. Outer column 48,000 minus 14990, that is 33010. Then after motor vehicles we have plant and machinery. Now plant and machinery in trial balance is 3 lakhs. Again that will come in inner column. From that again we'll subtract depreciation. 3 lakhs into, now what is the rate of depreciation on plant and machinery? 18.1%. So into 18.1%, 54,300. Now 3 lakhs minus 54,300, 2,45,700. Okay, 3 lakhs minus 54,300, 2,45,700. All the tangible fixed assets have been recorded. Now we can do the total. So 24,000 plus 90,500 plus 7411 plus 33010 plus 245700. So 400621. Okay, try it once again. 24,000 plus 90,500 plus 7411 plus 33010 plus 2,45,000. So 3700. 400621. So after tangible fixed assets, intangible fixed assets, we don't have capital work in progress, we don't have non-current investments. Directly after that we'll make the 7th note of non-current investments. Now non-current investments, all of you see which item is given to you. NCI marked item. 8% investment in government bonds, 10,000. And tick is there means there is a disclosure. So first let us write this 8% government bonds of what amount? 10,000. 8% investment in government bonds, 10,000. Total also 10,000, and in bracket we will write the market value. That is the disclosure. All of you see in the adjustments what is the disclosure of investments market value? 15,000. Market value is 15,000. We have to give that disclosure to the shareholders. So market value rupees 15,000. Total will come to same 10,000. Then 8. After non-current investments, we don't have other non-current assets and long-term loans and advances. Then in current assets, we don't have current investments, directly inventories. Now inventories, what we will have is from the adjustments, you all can see we have marked it. Stock of wheat 40,000 and flour 70,200. Okay, that is marked as inventories. Stock of wheat and stock of flour 40,000 and 70,200. Stock of wheat 40,000. Stock of flour 70,200. Total 1,10,200. Then after inventories, trade receivables. So all the items marked as T are only one item is there, directly trade receivables are given to you. They are 61,700. Okay, trade receivables 61,700. That itself will be the total 61,700. Then after trade receivables, we have cash and cash equivalents. CCE marked items. Okay. Trade receivables are taken. Now cash in hand 3,200 and cash at bank 1,90,000. Cash in hand 3,200, cash at bank 1,90,000, total 1,93,200. Then after cash and cash equivalents, we have short-term loans and advances. In that we have advances. See in the question, short-term loans and advances, how much are advances? 54,000. That itself is the total. Then other current assets, we don't have directly. Contingent liabilities and commitments. Okay, we don't have other current assets, so directly contingent liabilities and commitments, which we have marked as footnotes. Okay, we have marked it as footnotes in the question. So adjustments, all of you will see. Fifth adjustment, footnote we have marked. Proposed dividend, we have to count 12% on equity capital. I discussed equity share capital is 2,44,000, so we'll count 12% of 2,44,000. So first we have proposed dividend 2,44,000 into 12%. As we discussed, what is 2,44,000? 12%, 29,280. And then dividend distribution tax, we will count on 29,280 into, what is the rate of dividend distribution tax? 20.56%. That will count on the dividends amount. Okay, so dividends amount 29,280 into 20.56%. Okay, be careful, you have to count it on the amount of dividend. So 29,280 into 20.56%, that is 6019.9 and 6020. Then after dividend distribution tax, what other item of contingent liability do we have in footnote? This one. Claim of 40,000 for workers' compensation is being disputed by the company. So workers' claim disputed by the company 40,000. Total contingent liabilities will come to 40, 69, 75,000, 200 and 300. 75,300. Okay. Do it everyone. 29,280 plus 6020 plus 40,000, that is 75,300. So all the notes of balance sheet are over. Now we make the notes of P&L statement. First is revenue from operations. In that we have sale of floor, that is 12,60,000. Okay, sales of floor, that is 12,60,000. Sales of floor 12,60,000, and that itself is the total. Then after sales of floor, we have other incomes. In other incomes, we have interest received 400. Interest received 400. Then rent received that is 2520. Rent received is 2520. No other incomes are there. Total will come to 2920. Then after other incomes, we have cost of materials consumed. In this, we will have opening stock of wheat. Wheat is the raw material over here because it's a flour mill. In that, we will add purchases of wheat, and then we will minus closing stock of wheat. So everything related to wheat being a raw material will come in cost of materials consumed. You all can see opening stock of wheat is 32,000. Okay, plus purchases of wheat is 8,10,000. 32,000, 8,10,000, and adjustment 1, 40,000 is the closing stock. Okay, 32,000, 8,10,000, and 40,000. 32,000, 8,10,000, and 40,000 we will write in bracket because we have subtracted. So do it 32,000 plus 8,10,000 minus 40,000. 8,02,000, and that itself will become the total. Okay, so consumption of raw material of wheat here comes to 8,02,000, right? Then after cost of raw materials consumed, we will have direct purchases, which we don't have. We have not purchased the flour directly. So direct purchases of finished goods we don't have over here. Directly next note what we will have is change in inventories. Okay, direct purchases of finished goods always are recorded. There is no purchase of flour over here. So change in inventories. Now in that we will have opening stock of flour, that is 19,000. Okay, change in inventories, opening stock of flour 19,000. From that we will minus closing stock of flour. So closing stock of flour, what we have to minus is, as per the adjustment 1, 70,200. Okay, 70,200 is closing stock of flour. That will come in change in inventories. Now if you minus that, 19,000 minus 70,200, you will get the negative figure. With 19,000 minus 70,200, we'll get negative figure of 51,200. Then after change in inventories, we will have employees benefit expenses. E-marked items. So employees benefit expenses, E-marked items, we have salaries, and there is a tick on that. So 12,000 will come in inner column. Okay, salaries 12,000 in inner column. Plus outstanding, adjustment is outstanding. How much is outstanding as per adjustment 2? In salary, 600. Okay, 600 will add outstanding. So 12,600. Then after salaries, which other employees benefit expense? We have wages. Wages 10,000 again in inner column. Add outstanding. Now in wages, what is outstanding in adjustment to? 1,000 rupees. So that we will add over here. Outer column 11,000. That's it. Total will be 23,600. There are only 2 employees benefit expenses. Okay. Then after employees benefit expenses, next note will be finance cost. We don't have finance cost. Okay, there is no item marked as F. We don't have finance cost. So directly we will have depreciation and amortization. Now depreciation and amortization will directly get from the tangible fixed assets. So depreciation on building. Okay, depreciation on building all of you directly look at tangible fixed assets. Now, what is the depreciation of building? 9,500. Okay, 9,500. Then we have depreciation on furniture. What is depreciation on furniture? See in the working order of tangible fixed assets, 2589. 2589. Then depreciation on motor vehicles and depreciation on plant and machinery. Motor vehicles is 14,990 and 54,300. On plant and machinery. So total will come to 9,500 plus 2589 plus 14,990 plus 54,300, that is 81,379. Then after depreciation and amortization, lastly what we have is other expenses. In other expenses, first we have administration expenses. All the items marked as A. In that we have printing and stationery, 3,200. Tick is there means inner column. Printing and stationery, 3,200 in inner column. Plus adjustment is outstanding. So adjustment of outstanding, adjustment to printing and stationery, what is outstanding? 2,400. So outer column 5,600. Okay. Then after printing and stationery, what next we have is A marked items. Postage and telegram, directly in outer column 2,500. Postage and telegram 2,500. Sorry, 2,000. Postage and telegram is 2,000. Okay. Not traveling expense, postage and 2,000. Then after postage and telegram, what next item is marked as A? Director's fees. Audit fees will be administrative expense, sorry. So audit fees, 2,000. Audit fees, all of you mark it as 2,000 administrative expense, okay? Audit fees, 2,000. Then after audit fees, we have director's fees, 500. That's it. That is the last item of administrative. Director's fees, 500. Total will come to 5,600 plus 2,000 plus 2,000 plus 500, 10,100. Then we have selling expenses, S marked items. Traveling expense 2,500. Only one item is there. Traveling expense 2,500. That itself will become total of selling expenses. Then we have miscellaneous expenses, M marked items. In that we have manufacturing expenses 1,60,000 in inner column. Manufacturing expenses 1,60,000 in inner column. Outstanding is to be added. Add outstanding. In outstanding, we have adjustment to 44,500. Okay, outstanding of 44,500. So 1,60,000 plus 44,500, 2,04,500. Then which other M marked item is there in the trial balance? After manufacturing expenses, sundry expenses 800. Okay, sundry expenses 800. That's it. So total will come to 2,04,500 plus 800, 2,05,300. Okay, so all the notes have been taken into consideration. Now we can make the P&L statement and balance sheet. You would already made the format, so we have to fill in the blanks. Okay. Very first, revenue from operations. So revenue from operations we obtain as 12,60,000. Okay, revenue from operations is 12,60,000, and note number is 13. From note number 13, 12,60,000. Then other incomes from note number 14. $2,920. Total incomes 1 plus 2, 12,62,920. Then cost of materials consumed from note number 15, 8,02,000. Then direct purchases from note number. We don't have direct purchases. So nil. Then change in inventories from note number 16, we have negative amount. Change in inventories minus 51,200 in bracket. Then employees benefit note number 17, 23,600. Okay, 23,600. Then finance cost we don't have, so nil. Then depreciation and amortization note number 18, 81379. 81379. Then other expenses note number 19. Okay, other expenses total is remaining to be done. Total other expenses. Do it administrative 10,100 plus selling 2,500 plus miscellaneous 2,05,300. So 2,17,900. Okay, other expenses 2,17,900. Now we can do the total. 8,02,000 plus minus 51,200 we have to subtract. Okay, plus 23,600 plus 81379 plus 2,17,900. That is 10,73,679. Okay. Now profit before tax will be 3 minus 4. So 12,62,920 minus 10,73,679. So 1,89,241. Now that extraordinary item we subtract, that is in bracket you write factory closure cost. What is that factory closure cost we have in this question? 12,000. Okay, factory closure cost is 12,000. So that we will have to minus over here. Now profit before tax 1,89,241 minus 12,000, that is 1,77,241. From that we'll minus provision for tax. Now as per the adjustment 3, the provision for tax is 25.75%. 25.75%. Okay, so 1,77,241 into 25.75%, that is 45,640. If you round it off, 45,640. If you minus that, profit after tax will be 1,31,601. Okay. Now we will make the workings of statement of retained earnings. Working note 1 of statement of retained earnings. In that, we'll start with opening balance of profit and loss account. That you'll find in trial balance 142367. Then after opening balance of profit and loss statement, we have to add this amount what we get from P&L statement. Profit after tax of 131601. 131601. Add profits after tax 131601. So do it 142367 plus 131601. That comes to 273968. From that we will minus appropriations. So appropriations in P&L statement, you find it on debit side. Dividend paid of 24,400. Dividend paid 24,400. Then dividend distribution tax on that is there 4967. Then adjustment is also there. Transfer to reserves, 6th adjustment, 12,000 we have to minus from statement of retained earnings for transfer to reserve, 12,000. Transfer to general reserve, 12,000. So these three appropriations we have to minus 24,400 plus 4967 plus 12,000, 41,367. If you subtract this from 2,73,968, then what we'll get is 232,601, balance carried forward to balance sheet. Balance carried forward to balance sheet. Now from these items we will make the pending working notes, schedules first, notes first, and then we will make the balance sheet. So which ones were pending in the notes? Let us see that. Note number 2, P&L statement from working note 1. Now what amount did we get over here? 232,601. 232,601. Total of reserves and surplus would be 84,000 plus 232,601. That is 316,601. Then provision for tax, short-term provision is pending. See in the P&L statement, what provision for tax did we get? 45640. 45640. Total also 45640. Now we can make the balance sheet. Okay. Share capital from note number 1, 2,44,000. Reserves and surplus from note number 2, 3,16,601. So total will be 2,44,000 plus 3,16,601, 5,60,601. Then we don't have long-term borrowings. We don't have other non-current liabilities. We don't have long-term provisions. So total will also be nil. Then short-term borrowings we don't have. Directly trade payables, note number 3. Okay, trade payables from note number 3, 156,180. Then other current liabilities, note number 4, 67,300. Then short-term provisions, note number 5, 45640. Total 156,180 plus 67300 plus 45640, that is 269,120. Total of liabilities 269,120 plus 560,601, that is 829,721. Then asset side, tangible fixed assets, note number 6. Tangible fixed assets from note number 6 we get 4,621. 4,621. Then intangible we don't have. Capital work in progress we don't have. Non-current investments from note number 7. Non-current investments from note number 7, 10,000. Then long-term loans and advances we don't have. Other non-current assets we don't have. So 4,10,621. Then current investments we don't have. Inventories from note number 8. $1,10,200. Inventories 1,10,200. Then trade receivables, note number 9. 61,700. Trade receivables from note number 9. 61,700. Then cash and cash equivalents from note number 10. 1,93,200. 1,93,200. Then short-term loans and advances from note number 11, 54,000. Short-term loans and advances, 54,000 from note number 11. And other current assets we don't have. So total of current assets in the outer column, 1,10,200 plus 61,700 plus 1,93,200 plus 54,000, that is 4,19,100. In that we add 410,621. So 829,721, the balance sheet gets tallied. 829,721. Okay, the balance sheet gets tallied. And contingent liabilities and commitments from note number 12. That is 75,300. Okay, 75,300. So all the items of balance sheet have been taken. So this is how we have to solve the full-fledged question where we have to make P&L statement also and balance sheet also. Okay, that'll be all for this lecture. Next question, full-fledged, again we'll take up in the next lecture. Bye everyone, take care, see you in the next lecture.